Now, before I get started, I just want to make an announcement. I uploaded an interview with Anthony Lacavera. It is on X22 Report Spotlight YouTube channel. So all you need to do is go over to YouTube, type in X22 Report Spotlight. It will bring you right to that interview. Or you can come over to x22report.com or newsentinel.com. Scroll down a little bit, look over to your right-hand side. You'll see the interview there, and you can play it right on the site. Or you can play it on Steemit. That is steemit.com/@X22Report. Let's get into the economic collapse financial news. Now, what's very interesting is a couple of reports ago, I said that eventually what will happen is the corporate media, those who were in the Fed, will eventually turn and start to say that the economy is not doing that well. And we're already starting to see this with like Ben Bernanke coming out saying, oh, the economy is going to be crashing in 2020. The IMF is out there saying the global economy is becoming darker and darker because of the tax cuts and the tariffs and the trade problems. And you can see right now that they're pushing this agenda. Now, if you look at the economy today, you can see that we have been built up on this gigantic illusion, just like in 2008. Everyone thought that everything was great. And if you go back to 2007, leading into 2008, and you listen to all the financial pundits, anyone that said any different, that the economy was going to collapse or we're going to have credit problems or the housing market was going to collapse, they just sat there and laughed and said, that's completely impossible. Look how great the economy is doing today. And then what happened? Everything fell apart. They were completely wrong. Just because you're looking at this illusion and you're looking at the illusion that the economy is doing well and they're manipulating all the numbers doesn't mean it's going to last. It doesn't mean that this is really what the economy is made out of. Because if you look back in 2008, everyone who was investing in those subprime securities, they thought they were secure. AAA, baby. They're great. And then they come to find out it was all a lie. The same thing is happening right now. The illusionary numbers in the housing market, the stock exchange, all of this stuff has been made up. And it just didn't start in 2016. It went all the way back to 2008. And even prior to that, this is the way the central bankers work. And if you listen to the NFIB Small Business Survey, you would think that the economy is doing better than ever. Unemployment's very low. The stock market is way up. Corporate profits are up. Everything looks great. The question is, why are people worrying about the high cost of living? Why are they worrying about the oil and gas prices? Why are they worrying about tightening credit conditions? Why are they worrying about labor market problems? Why are individuals who are graduating from school, why are they having a difficult time finding those high-paying jobs? And when they've taken this survey, they found that 71% of the people, they're worried about the high cost of living because wages are stagnant and inflation is hitting. I mean, if we look at the younger respondents, those in their 20s, they're reporting difficulty in finding jobs to be the second biggest risk, as the respondents in this group are more likely to be students looking for employment opportunities. The older generation, 60 and up, well, they're saying their biggest concerns is the stock market crashing. That's the highest thing on their list right now. The next one down is inflation. Because they see what is happening. The younger generation is experiencing the job market. The older generation is saying they're very worried about their pensions. They're very worried about the stock market. They're worried about the cost of living. And we can see right now, this entire economy is one gigantic illusion. Now, we're starting to see a capital flight to Germany, the Netherlands, Finland. It is all in full swing right now. The debt cannot be paid back. The central banks of Germany's Euro partners, Italy, Spain, France, owe the Bundesbank almost €1 trillion. This is a new high, more than ever before. And guess what? This is going to continually rise. It's not going to shrink. There is no security for this money. Italy is 464.7 billion euros in the hole. Spain is 376.6 billion in the hole. Creditors owe Germany, the Netherlands, and Finland over 1.157 trillion euros. In May, Italian liabilities increased by almost 40 billion euros. So capital flight to Germany is in full swing. Originally, Target 2, this was designed to facilitate cross-border transactions within the Eurozone. The system achieved this goal. From the point of view of the critics, this means that the Deutsche Bundesbank provides a long-term unsecured and non-interest-bearing loans to the central banks of other Eurozone countries, especially the central bank of southern countries like Italy, Spain, and Portugal. Target 2 is fundamentally a problem in the Eurozone. The ECB guarantees these loans. As long as they are guaranteed, then why not make more loans? And this is what they've been doing. Germany's going to have to pay no matter what, one way or another. And here are some of the possibilities. Germany and the creditor nations forgive enough debt for Europe to grow? I doubt it. The other alternative, maybe break up the Eurozone. I think the best move would be for Germany to leave the Eurozone. Germany is in the best shape to suffer the consequences. And we see right now that the Eurozone most likely will end up disintegrating. Because what is happening here is that these countries are in trouble. The banks are in trouble. The global economy is in trouble. The central banking global economy is being ripped apart right now. And we've been talking about the narrative on whoever controls the narrative is going to be the winner and will be able to control the next economy we move into. And we see that the Fed just raised the rates once again. And they're expecting to do this 2 more times, they're saying. And basically, there was a vote. And Fed raises rates with an 8-0 vote. Everyone said, yeah, let's do it. So the Fed is pushing their agenda. They're copying exactly what they did prior to 2008. Going from 2006 to 2007, they raised the interest rates up to a certain point, and then everything just started to collapse. I mean, it was collapsing when they reached the height of the interest rates, and then once they said, okay, that was enough, they started lowering them, not by a little, they dropped them very, very quickly. Now, of course, they were not to blame for this. They blamed everything else. The same thing is going to happen once again. They are going to raise the interest rates, and we're already seeing the economy start to fall apart here. It's deteriorating in the housing market, the automobile loan market, the student loan market, GDP numbers, you name it, it's all going to fall apart. Now, the Fed also expects the Fed funds rate to rise from 2.1 to 2.4% at the end of 2018, and from 2.9 to 3.1 by 2019. And you know what's going to happen. Once this hits a certain level, the whole thing falls apart. Now, since the Fed last hiked rates in March, financial conditions, they started to fall apart. And we can see this. And the U.S. economic hard data, everything was declining. Everything started to fall apart. And this is what we're seeing right now. The same thing happened back in 2006 going into 2007. All the data, everything that we saw started to fall apart completely. And we're going to see the same thing. So they've just pushed their agenda right now. And they're pushing it and trying to force this system to crash. So they can say, and they're already telling us who's going to blame for all of this, and this is the policies of Trump, the tax cuts. This is why Ben Bernanke says the economies are going to be crashing in 2020 because of the tax cuts. Christine Lagarde is out there from the IMF saying because of the tariffs, because Trump's policies, the clouds are rolling in and it's getting darker and darker. Soon you're going to hear the corporate media. This was the signal right now. They already started the deterioration of the economy with the last rate hike. This one is going to drive it even further south. So now the corporate media is going to jump on the bandwagon because they have nothing left. And they're going to start to blame everything that Trump is doing right now. This was the plan from the beginning. This economy was never going to make it. And at the same time, Trump is going to blame this on the central banks. He's going to blame it on government officials from the past, blame it on the central banks, and most likely move to audit the central banks. And you can see right now that everything that is being done is to control the narrative. And everything the Fed is doing is they're going to try to control the narrative, saying that we had nothing to do with this. This was all the Trump administration who did all of it. And they're going to say, they're the ones to blame. We said everything was fine. Everything was recovering. That's why we were raising interest rates. Well, if you look back in history, you can see the Fed actually causes these problems. This is their system. Their system is made up of these boom and bust cycles. And this time they know that this system can't last any longer. They're running out of tricks. They're running out of different methods to use, and everything's starting to fall apart. They can't make people spend money. They can't do anything to get people jobs. And remember, this is 70% of the GDP. This is why you see retail breaking down. This is why you see the automobile industry breaking down. This is why you see all of this happening at the same time. We are going to go through this transition, and it's approaching very, very quickly. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.